Question: which among the following is correct about abnormal cost? Options: expected at a given level of output, charged to costing profit and loss account, part of cost of production, none of the above. Charged to costing profit and loss account. Which among the following costs are charged to costing profit and loss account? Options: estimated cost, controllable cost, normal cost, abnormal cost. Abnormal cost. Normal costs are generally dash cost, controllable, uncontrollable, discretionary, avoidable. Uncontrollable. Predetermined cost based on technical estimate for material, labor and overhead for a selected period of time and for prescribed set of working condition is known as standard cost, budgeted cost, normal cost, avoidable cost. Standard cost. An estimate of expenditure for different phases of business operations for a period of time in future is called budgeted cost, variable cost, estimated cost, development cost. Budgeted cost. Items of cost like wages, rent, etc., which involves cash payment to outsiders are normal cost, product cost, out of pocket cost, none of the above. Out of pocket cost. Costs required for production and will not be incurred if there is no production are product cost, direct cost, period cost, committed cost. Product cost. Which among the following is not a part of product cost? Options: direct materials, direct labor, selling overhead, factory overhead. Selling overhead. Items of cost like wages, rent, etc., which involves cash payment to outsiders are called explicit cost, period cost, product cost, none of the above. Explicit cost. Certain costs, also known as economic costs, which do not involve immediate cash payments are called explicit cost, indirect cost, avoidable cost, implicit cost. Implicit cost. Cost which can be directly identified with and allocated to cost unit or center. Indirect cost, direct cost, product cost, none of the above. Direct cost. Overheads or on cost is the total of all direct expenses, all indirect expenses, direct expenses plus factory overhead, none of the above. All indirect expenses. Prime cost is the total of all direct expenses, all indirect expenses, direct expenses plus factory overheads, none of the above. All direct expenses. Hypothetical costs which do not involve any cash outlay and used solely for the purpose of decision making are called indirect cost, notional cost, explicit cost, none of the above. Notional costs. Rent on building is an example of dash imputed cost, explicit cost, standard cost, abnormal cost. Imputed cost. The process of charging such costs which are directly identifiable with some products or departments to such cost centers is called cost absorption, cost allocation, cost apportionment, none of the above. Cost allocation. Distribution of costs which are not directly identifiable with any cost center amongst various cost centers on predetermined basis is called cost absorption, cost allocation, cost apportionment, none of the above. Cost apportionment. Regulation by executive action of the costs of operating an undertaking, particularly where such action is guided by cost accounting, is known as cost ascertainment, cost planning, cost control, cost audit. Cost control. Conversion cost is calculated as sum of all direct materials, sum of all indirect materials, total cost of production minus direct materials, prime cost plus factory overhead. Total cost of production minus direct materials. For exercising control over cost, the best system is dash costing, standard, historical, marginal, estimated. Standard. Dash system is best suited for undertaking job works. Process costing, job costing, contract costing, batch costing. Job costing. Dash system of costing is suitable for toy making. Batch costing, job costing, operating costing, process costing. Batch costing. The sum of direct wages, direct expenses and overhead costs of converting raw materials into finished products is called prime cost, works cost, direct cost, conversion cost. Conversion cost. An example of personnel cost center: machinery, storeyard, maintenance department, foreman. Foreman. Cost centers are created for segregating costs into fixed and variable, control and fixing responsibility, making decisions, ascertaining profit. Control and fixing responsibility. Conversion cost excludes direct material, direct labor cost, direct expenses, all of the above. Direct material. Variable costs increase in total due to increase in sales, increase in volume of production, increase in profit, all of the above. Increase in volume of production. Conversion cost excludes direct material, direct labor cost, direct expenses, all of the above. Direct material. Variable cost increase in total due to increase in sales, increase in volume of production, increase in profit, all of the above. Increase in volume of production. Common cost of facilities or services employed in the output of two or more simultaneously produced or otherwise closely related product operations, commodities or services. Options: uniform cost, common cost, joint cost, product cost. Joint cost. Costs which are collectively incurred for a number of cost centers and are required to be suitably apportioned for determining cost of individual cost center is uniform cost, common cost, joint cost, product cost. Common cost. Mention the item of expense which is excluded from cost accounts: raw material, office supplies, salaries, income tax. Income tax.